Welcome to the We Founders podcast. We are women entrepreneurs, founders, and investors sharing our stories about how we raise funds, invest, and build our businesses from the Western Balkans. I'm your host, Gaia Montelatici, General Partner at Studio X Ventures. Ivana is really someone that has a lot to share with us. She's from Novi Sad. A while back, when she was before her 20s, she left on different adventures that took her from an international degree to building her business and into the VC world. And she really is one of the very few women in this industry, and I'm really proud of her for that. And I have a lot of questions about how she's been joining the adventureship with her entrepreneurship. So, Ivana, I know that, we have a lot to talk about. I don't want to take too much time introducing you, but I would love for you to share with us a few words about yourself and then jump right into your first adventures and how actually they've been shaping and driving your professional career.
Sure. Hello, everyone. Hello, Gaia. It's a great pleasure to be here, and thanks a lot again for the invite. We had a chance to meet very recently, but clicked very well, I would say, and I'm very honored to be invited to be here. I am from Novi Sad, left when I was 17. Since then, have been going around a little bit to say. I was very lucky and fortunate to be able to go to finish last year of my high school in the UK, stay there to study. Couldn't decide on one thing, so did math and chemistry. Decided I was not really born to be a next 𝗵𝗴𝗴𝗏 Einstein or whatsoever, discover something important. So I was in between finance and law. Finance was a shorter way, so I went to Imperial to do Master of Finance. And back then, somehow everybody was going into banking. Unfortunately, startup world was not such an obvious choice. I wish it was. And I went then into banking. I was there for a year and a half in London. I was looking for an investment bank with a purpose. So I went in agri-food bank, didn't really do much purposeful things, but that's fine. I sold products to corporates such as Nestlé, Tate & Lyle, etc. And then I was 25. I had a big dream to live in Latin America. Ideally, I would have been transferred by the bank, but they didn't really want to transfer me because I didn't speak a word of Portuguese. They wanted to transfer me to Chile, which is not exactly the same as Brazil. Then I went alone for an adventure on absolute, desperation of my parents, as you can imagine, who told we sent you to a country like UK, you would end up in Switzerland, and now you're going to Brazil. But I'm happy.
Why Brazil? Why Brazil, Ivana?
It's a good question, and one I still cannot answer because I landed there in Sao Paulo and was interviewing for jobs in all the investment banks. And Brazil was just going very conveniently into a recession, so very good timing. And the biggest question was always, why? Why would you leave London? Why would you leave a stable job? It was just, my mother would say, because I was born in 88 and there was the song Lambada that came out of 1989, and I would like absolutely memorize in front of the TV and dance. And she said, it's all fault of that song. She liked that explanation. I don't know, but something drew me there. It was very much a gut feeling, I have to say. And I'm happy I followed it. Also, I was in an age for that, even though the timing was really wrong, I have to say. Emerging markets go through boom and bust, but simply I said, I'm 25 now, it's now the time. Well, obviously there was a World Cup and Olympics also coming along, so I thought it was also a good time in terms of that. So I learned Portuguese fairly quickly because you can't really get along with English there. And funnily enough, worked in a small fund very short time, and then was invited to join the bank because I learned the language in the meantime. There I had a very interesting position, which was structuring and product. So I got to go to the randomest parts of Brazil to visit this huge soybean sugar producers, which kind of have land the size of Serbia. So that was very interesting, and got me a lot of exposure to the country, to culture, etc. After around 2.5 years or so, because I never really went to work in a bank, I always wanted to have my own business. And I was always very drawn to food, just maybe also being from Vojvodina. And when I was 5, I said I would produce food and export it. So I think I had this idea, there is this part of the world which has amazing natural resources, produces so much, but somehow only exports commodities to Germany and Netherlands. And then they add the value and they just export gross stuff, or maybe Havaianas, but that was about it. So I said, I would like to find these small producers and work with them and help them to export their products and brands to European markets, Asia, Europe, America, etc. That didn't really go according to the plan, as it usually doesn't, because I found this small producer in the south. And then they offered me this other product. I had no idea what it was, grape powders. I took it and went to LA to a trade fair and offered it to everybody. Nobody knew what it was. But they all asked me the same thing. They were like, do you have acai? Do you have camu camu? So I went back to Sao Paulo and Googled all this stuff. What is that now? And found this whole world of ingredients. And this is really where everything started, like my business, but we can go into that later. From Brazil, I left Brazil because I thought it was the right time to leave it, because I started missing Europe and I started missing everything functioning. Even though I was making fun of Brazilians first 2 years, but that's nothing special that everything functions. But obviously there are parts of lifestyle and things that we take for granted in Europe, like safety, being able to walk at night at 10 alone, that I started to miss. And it was always a plan to come back. So I'm very close with my family and wanted to be closer to them, which is when I actually went back. Was in between Brazil and Serbia, actually, when it comes to business. We can go into that a little bit later and some learnings from there. And then ended up in Paris and then very accidentally in Munich. So, and this is where I'm currently and will probably stay, as hard as it sounds.
But Ivana, tell me a little bit more about your business. You know, what is it now? What's happening? Who's running it? How long did it take you to make it into a sustainable business? What's happening there?
Yeah, so a few contracts are still running that are kind of legacy contracts for me, but let me say a little bit what it was. So essentially the idea of it, having seen how difficult it was for me to find the suppliers of these specific ingredients, which are essentially organic ingredients, so derivations of exotic fruits, mainly from Amazon rainforest, meaning mainly from Brazil and Peru, that are used in food industry, also in cosmetics industry. So that would be powders, pops, oils, etc. So the idea of the business was to centralize the sourcing of these ingredients from different Latin American countries, from reliable suppliers, and also to combine the shipments and send it to Europe, US, and as I mentioned, there was one client in Singapore and was one client in Hong Kong. It went well. It was a very non-techy business. I have to emphasize that, as you can tell, it was very relationship-based because essentially on one side there were suppliers, smaller or larger, in Latin America who didn't tend to speak English, who never really exported. So there was a lot of also the whole learning and kind of how do you export, what are different regulations, countries, etc. And then there was obviously the buyers, which are importers, distributors, so food companies, cosmetic companies, etc. It went well. It was profitable pretty much from the beginning, which is very unusual in startup world, in tech startups at least. But it was also limited in terms of scalability. And the problem with that kind of business is that you're in the middle of the supply chain, or you actually finance the production, which was a tricky one because the suppliers, even the most reliable ones, there were a lot of problems. And on the other side, or you actually import. And that was a point where I said, do I import into Serbia? Like what? Serbia is not EU. Does this make sense? I had employees. Actually, I had an office in Novi Sad. So the company was in Brazil and also registered in Serbia. And that was actually a point, probably the hardest decision of my life, was to walk away from it, leave it where it is, to honor those contracts that were going on, and those ones that still had like a year, 2, 3 of like actually shipments. But then I said, or the third option actually was to have my own food brand. I was going to international trades pretty much every second month. all around the world, from LA to Hong Kong, which was great. But there was so much of everything in the market that I, quite frankly, there was that point where you look at it all and nothing really feels right. And this is where VC came along, which was 5 Seasons Ventures, a food and agri fund from Paris. It was a new fund. And I kind of said, this is a great opportunity. Let me see, like, let me jump off, and maybe there is more things I need to learn in order to be actually successful entrepreneur. Because looking back, it takes some time. I think anybody who's been through that can relate. It's very easy to see it's a failure. Then after some time, and also to identify yourself a lot with the company, which is a mistake I did. And then to also look at, oh my God, I made every single mistake in a book of entrepreneurship. But then when you look back, you realize it's very classic mistakes for a first-time founder. And there's a lot of learnings that actually today as a VC, I can also apply. So
absolutely. But that's a big shift.
Yeah.
By being a founder and now actually sitting on the other side of the table, from the perspective of someone who's used to decide, what are the worthy business for investments, so what does it take to that mind shift? And maybe actually, it's really something that entrepreneurs and founders can take back to the VC world, and they can sort of strengthen it more.
Yeah, well, I think, let's put it this way. I didn't really know much about VC world, and I was very lucky to join actually a new fund that was just creating investment strategy. And even though I had a very specific topic as entrepreneur in residence, I had a chance to sit to a partner who had 25 years of experience. So I had a chance to learn a lot from his stories, but also to see that, because my view, quite frankly, before was investors are just evil people. They come in, they give you money, they take a stake in your company, they tell you what to do. Like, this was my very ignorant way of looking into it.
They all think that way when they're entrepreneurs and founders. So yeah.
Probably, yeah. But then I learned that a good investor can add so much value, so much, because investor has been there, has seen so many different business models, and you inevitably, from many things you see, you apply them to your portfolio companies. Also, the more experience they have, like, they've seen it pretty much all. So many things that entrepreneur maybe get stuck, a VC, special experienced VC, can really find a solution very, very easily. So today, I believe, and again, I don't think every startup, I don't think every business should be VC backed and should go for VC funding. Like, my type of business I did absolutely was not VC. I mean, I would never have invested in my business because this wasn't scalable enough. So it didn't really have almost anything I looked for. Starting with one thing, I was the only founder, which if I was doing it again, I would have never done it. But few learnings that I took, and I think those apply maybe regardless if it's like business in which kind of sector, that I'm very now about when I look at the teams and also when working with portfolio companies, is, as I mentioned, you don't invest in one founder. You expect a team, because it's the team that makes it. And for example, a big red flag would be if somebody's one-man show kind of thing. Sometimes you may have management teams that they're still one-man show because one wants to decide everything, which is never a good thing. Second would be, I had a vision, but now looking, it wasn't clear enough. And it needs to be clear enough. It needs to be big enough, and it needs to be then broken down into what and how can that be achieved. And I think at some point, and maybe that also happens to other founders, they had it, but somehow things change and then they lose the vision. And that's a very dangerous situation to be, because even if business is running and going well, unless you know where you're heading to, kind of how are you going to arrive. And the third thing, which I think is very useful as a VC, because investing in rather Series A stage where you already have some traction, some customers and stuff, I've learned how easy it is to fool yourself by thinking you have this big pipeline, sales pipeline, a sales funnel, and these are the qualified leads and stuff. And at the end of the day, the only thing that matters, who actually converts into customers, which ones did you actually monetize? And it's very easy to get caught up and busy in this whole thing. Well, this is moving, especially B2B, because I did B2B, right? I was selling to corporates essentially, which most of the startups I've worked with also do. You have a lot of stakeholders. You need to navigate them. You can get stuck with people that cannot make a decision, lose a lot of time. And I think this learning has been really helpful, because now I can actually look and be like, okay, this is the pipeline, but what's actually happening? Like, are we actually moving somewhere, or we need to change the sales strategy?
Yeah. So going again a bit deeper into your experience in working in the VC world, how do you see it changing? There's a lot of talk about the democratization of the industry, the diversification of the industry. Now, in the Corona world, a lot of my advisors, tell me, it's not anymore the time of the dinosaurs, it's the time of the mice, so let's stop thinking in terms of Amazons and Googles. We cannot only build those, right? Do you see this sort of philosophy, reasoning, modeling going in that direction? What's happening?
So I think, and I've been very lucky to now in this region speak to partners of some really great funds and hear their view on the market, and they've been in it for 20, 25 years. So there's a lot of wisdom there and a lot seen, and some of them invested even in 99 before the dot-com bubble. And they actually see that they see the pattern repeating, because there is a lot of money on the market, incredibly much. It somehow seems that everybody's starting a VC fund, like some sort of a VC fund that invests in startups, which I think is great on one hand, because there's a lot more money to fuel and to fund innovation. And that also means that there are a lot more startups are being started, etc. So it's a both effect. But what we now see is that the size of seed round is now the size of a pre-seed round. The rounds are getting a lot bigger, a lot more competitive. There's a lot FOMO among VCs to jump on that next unicorn train. There is valuations that are high, a lot of times not really justified. There are some business models that are raising like incredibly much money that you sometimes wonder why. So I'm a bit maybe contrarian when it comes to that, and maybe a bit skeptical, because I think the good thing is that now we have a lot more players. So now you have accelerators, incubators, venture studios, venture builders, microfunds, like all sorts of things, which is great, because that means the industry is maturing, and that means that you have more players in the game. So the startups can maybe today, because you have a lot more specialized VCs. So for example, impact VCs, because impact investing topic is becoming huge. And I believe also is the future for the next decade or two, because it has to be, like they're being specialized. So like then you have health investors, so I think that's great, because that means that you can do more right matching, because actually there's this saying in Paris, like I've heard a lot, that startup and investor, when they speak, it's like dating. And then there is a relationship, because, and then they decide to get married, because the truth is you don't really get out of investment easy at all, and you want to make the right decision. So I think on the first place, they're matched well enough. So it's, for example, let's put it this way: if a founder doesn't want to build the next unicorn, and the investor wants to invest only in unicorns, well, you have a mismatch, and founder will be pushed into doing things the way they don't necessarily envision for their business. Investor will become frustrated, and you have a problem. So I think in that sense, it's a good thing, maturing market, more players, more money. But the bubble of huge valuations and huge rounds, and today the success is how big your round is, I it's not something I necessarily see as positive, because also not every business can be a unicorn and should not be a unicorn.
Exactly.
And I think we have what we need to do in Europe, especially because it's lagging behind the US. We need to have first-time founders that then exit. So what? Since when is 20 million exit a bad business and bad exit, right? And then they will become second-time founder, third-time founder, angel investor. So again, you get the ball rolling, and the system becomes more and more mature, etc. So I believe that also another factor is that as bad it is not to have enough money as a startup, having too much money is equally as bad. Because then, and I've seen this firsthand, they somehow believe they don't really need to produce revenue because they already have so much money like laying there. Yes, they can scale very fast, but the deployment of money in these big rounds, and I would be cautious. And the third thing I believe that, and going forward, I think it's going to be more emphasized on not the Ubers that make incredibly big loss on expense of VCs that are funding it, and a few other examples, but they are also now pushed to raise prices and go towards profitability. I think there will be expectations to come to profitability rather sooner than later.
Yeah.
And I think that's a positive thing.
Yeah, no, I agree with you totally. In terms of monetization, I think that's a much more strength and focus right now. What we say usually is, let's take littler money right now and show what you can do with that. So it's great that you can do a lot of things with smaller money. So then you're ready, right, for the next round, and you come with a much better valuation, which is not inflated, right, as you were saying. But going back again, I don't know many women, right, who work in the VC world. And you told me yourself that you were really the only one at the table with other colleagues of yours. So do you see that this is sort of changing right now in Europe? Are there more women jumping on that train? Does that reflect into some decision-making processes? Are investment decisions better from the VC side, or is it too early to sort of assess such things?
I think it's changing, but I think it's slow. It has more to do, and me being the only the funds where I've been at were sort of well diversified in terms of the teams. The problem was more management team sides. So the whole board meeting, and I've actually seen them very, very, very few times when there was a woman in the C-level, how the whole dynamics changes. The way the business is talked about, it just really changes. And I think it's so important to have a female. I'm not a feminist, it's not about that. And I believe you also don't invest in women just to invest in it because she's a woman. Absolutely not. Or a woman should work in a VC, just no. But I think you get diverse opinions. And this is really crucial. There was always this thing of, which I think we mentioned, right? There was always, if more women were on management boards of these banks, like the 28 crisis wouldn't have happened. Because I think men and women, I think we very much complement each other. We need each other. But I think we have some maybe different skills to bring on the table. And that's why I think it's really important also as a woman, especially in these men professions, not to try to be a man. Because I think being a woman and seeing things maybe from sometimes more empathetic way, in different way, simply different way, not better, not worse, different, I think has a lot of value. In VCs, there's definitely more money. There's no doubt about that. But I think there is few reasons for that. I think it will change because VC has been changing. Because before, I've had 8 years of other experiences and then went to VC. Sometimes I wonder why didn't I discover it earlier? But actually, there is also value in having done different things to bring value to the founders you work with, etc. But today you can do an internship. You can be 22, 23 and go into VC directly from university. So I think there it's going to come down to going forward to how does VC industry attract women? So maybe it's going to be a bit similar like how does investment banking when I was starting there and I was the only woman on my graduate, like on my graduate class in a bank. How well do they attract? Because there are specific professions, maybe a bit more intense, maybe, I don't even know. So maybe people with specific degrees go into it, maybe not, whatever. So I think there is going to be a point of how many women go in, but then we have the same things that banking has. One thing is how many women go in, but how many women do fall off in the meantime, on the way, how many actually get to management positions. In this case, decision makers in VCs, depends on the VC, right? But essentially, depending on the VC, doesn't matter, even an associate can influence the decision a lot. But ultimate decision makers are partners. So if you have partners, and I think this is also now changing, but if you have partners who are, let's say, 50 plus, and I can talk about more traditional culture, like countries like I'm now currently in, they have a specific way of seeing things. Many times these partners actually were not entrepreneurs. They came from banking or consulting, or etc. And even if they're very eager to hire women, once a woman comes to that stage to, let's say, become a mother, you have a problem because they expect that nothing is going to change. So you're still going to work 12, 14 hours a day and you're in a VC, which is not possible because simply the priorities are not going to be the same. With more flexibility as an option, that woman maybe would stay as an investor, wouldn't move out. But I think it comes down to the mindset, because many of these partners, and I'm not saying this but their wives took care of the children. They never had to adjust anything.
True.
When today you have more and more entrepreneurs and younger people, even 35, 40, 45, who had a very different experience, who maybe have a lot more equal partner. So they have seen it, when they have seen it firsthand, their wives, as they go through that, I think the mindset and approach is very different. So I think it depends at the end which kind of culture you are joining. And this is, for example, for me now, a very important one for like new position I'm going to start towards the end of summer. It's also, what is a mindset? Do I need to, once I have a family, do I need to give up being a VC? Because that's actually, that jump is really important for more women to become decision makers. And also, of course, ultimately, for women to start their own venture funds.
It's amazing. So tell us a little bit, how does your day look like in the VC you work for? How do you manage the portfolio? How do you work with the companies?
I think VC is a very predictable job. I always joked that there's no really way of planning a week or a day, because you work with startups, things always happen and take their own direction. So there's a lot of control. But when it's tried to structure as much as possible, but then there are always urgencies. I'd say it really depends on the VC. That's really hard to generalize. I've been working with few portfolio companies, only 6 portfolio companies, very hands-on. Most of the time spent on portfolio companies, really helping them from setting up reporting KPIs to working on specific topics with them on strategy, going international markets, business development, like fundraising, like every possible type. And this is what I've loved, because it's very operational. It's like being a VC, but with one leg in each startup. So it really nicely combines entrepreneurship and that other side, right? Because as a VC, the truth is, it really makes sense to be an entrepreneur and go into VC, because you were focused on one business, and then you have a chance to see if so many different businesses, so many different business models, to work with different companies. And what you do need to have as a VC, so it's this combination of being able to see the big picture, and then boil it down very much to details and be like, can this work? So you have to see the vision. At the same time, you have to be, it's a people's business. It's very much people's business. You need to be able to assess the teams well. Then after, you need to be able to I'm not going to say manage the teams, you don't manage the team, but to help them in the best possible way, because management teams also have found conflicts among founders. I mean, all sorts of things, right? It's just human behavior, human nature. So there is those different things, and there is analytical skills that come along, even in early stage investing, which is a little bit more art than science because you don't really have enough data. But still, you need to be able to look at the model, and you need to be able to assess, to find the logic, to find the patterns, to say, okay, you need to be rational, realistic, but then you have to be also optimistic, because otherwise you can always find, and I've had that when I started, I found every business model absolutely amazing. It's going to change the world. But then I became a lot more skeptical with time. And then I went into another extreme. I became too skeptical. And then I said, okay, so now I need to find a middle ground. There is always going to be potential risks, but at the end, venture capital is a risky business, right? You're always going to have risks. Things can go wrong. I think in early stage investing, at the end, it's, do you think that thing can make it? So even if product changes, even if circumstances can change it, can that team individually and together actually execute? Can they pivot? Can they change direction? Are they coachable enough to also listen to other people's opinions and things like that? Because that's also where investors should come along, because investors is a high level support. It's not, and it shouldn't be micromanagement the business. Like one really smart investor told me once, if I thought I could run the business better than the founders of my portfolio companies, I wouldn't have invested in them because what's the point? And I think it's that kind of fine combination, but no day is the same. So there can be days that there's a lot of pipeline calls, so-called deal flow, a lot of new companies, and one can structure that by always doing that a specific 1-2 days. There's a lot of, obviously there's board meetings, there's a lot of different sessions, and sometimes one-to-ones with portfolio companies. I believe there is also a lot of, it's really important to do networking, so to say, and create relationships with other investors, because that's where the best deal flow comes from my experience. So I would, for example, try to every week I have some one-on-ones like with specific investors, and we always exchange deal flow. Then we do one-on-one every 4 weeks, and also get in touch and speak to new investors, few new investors every week. And that has shown to be a very good habit.
It gets messy a lot, right? When you get into
yeah.
all of and the coachability part. So what are the successes that you mentioned that you can share with us?
In portfolio companies or in work with them?
Both.
So because I've worked with very specific topics, I would say, and I think this is a good approach to have, because you can't, again, you're not running the business. Like there should be a clear line. You can be a sparring partner. You can work with specific teams on a specific thing. But again, the ultimate call is theirs. But in my case, I've been, for example, let's say one company was building a SaaS model with them, like very closely. Another one has been monthly, like setting up monthly strategy meetings. So this is really like, where are we going? What's the vision? What's in 2 years? What's 4 years? What is 5 years? And those are proper brainstorming sessions, like hours long. And it's incredibly fruitful because so many things, and also because once they have this level of trust and comfort to actually then really be themselves, because there's also a little bit of investors who are a little bit removed and just have the founders see them once in 3 months. The tendency is to be a little bit, okay, so now I need to show the best picture possible. But when you're closer to them, then they start opening up. And this is, I think, very important, because being especially CEO is a very lonely role. So I would find it as excessive when they call and they tell you their own problem and that they struggle with something, whether that's a team, whatever it is. I've always been really, really happy about that. And those are kind of these indirect, maybe coaching, mentorship roles. There has been more difficult experiences, but still successful, like reducing the burn rate and having to analyze all the costs of a company and literally decide what's going to be cut and stuff like that together with CFO and CEO. But then at the end, it sometimes can be that the company saved financially. So that's also a success, even though a hard one. Then setting up, let's say, a health platform for a specific company that kind of has a product and it's to evolve. And that really takes looking at the competitors, looking at different industries, coming up with ideas. And then again, for example, that's been really great because my experience with co-investors has been amazing. And I think that's really also co-investors on specific portfolio companies, because let's say I've had the one experience, like there was also a lady in another fund that invested, and then a chief product officer was also the only woman on a management team. So we had this bi-weekly meetings, the three of us. And it was great because it would be first of all, so natural. We would just throw ideas, share screen. It was all on Zoom, unfortunately, during Corona. But so many good ideas came up with that. There's so many. And they've been doing really well. So those are kind of few examples.
There's a question from our audience. I think it's Alec. And he's asking to share a little bit more about the management of the portfolio, especially in terms of the requirements of the startup. And maybe to sort of contextualize, you can tell us what kind of companies and what stage of development they're in, because obviously when we are here in the Western Balkans, we always think in terms of very early stage, right?
Yeah.
And usually if you hear companies look for up to 1 million, more likely between 300 and 500,000.
When it comes to management of portfolios, so let's say once you've invested, and I've never really had experience with companies earlier than pre-Series A. So we're talking at that stage that the company already has, let's say last year would have already had, I don't know, at least 500,000, depending on the business model, but maybe 1 million revenue. So it would be really, there is a product market fit, there is a traction, there are first customers, or depending on, obviously healthcare is a bit tricky because sales cycles are so long, but then at least there are pilots in place, LOIs, things like that. At that stage, especially like that, there's a tendency to be the first kind of institutional investor, smart money. What happens is that usually, there is a board, but it still needs to be a little bit set up. There is usually no really monthly reporting or anything like that. No really set KPIs, etc. So for example, what I've done with all of them was to set up the monthly reporting. And there's a lot of value in that, actually. It can sound really like annoying, but there is a lot of value because it also helps them to track. So there is this, how do you structure? You need to structure it simple, not too long, but it gives investors, first of all, investors are up to date. And what happens when you do, whether you send it monthly or you do a call also to explain, there are no surprises on board meetings, that then half of the board meeting is lost in that discussion. But there's also this thing of, let's say you have hiring needs, some key hire. It's a lot because then there's a more regular communication, and you can always have this, let's say we always have this slide of like HR, and then they would be like, we're currently looking for, we would ask for investors to suggest if they know somebody, stuff like that. Also, when it comes to business development, we are looking for what our client, does somebody have, doesn't matter what it is. Well, in healthcare is very specific, but I think that applies to any industry. And so there is that part, the more bureaucratic part. And once it's set up, it works quite well, and everybody tends to be happy. And then obviously there is this, as I said, but that really depends on investor, because also people that have 30 portfolio companies, I mean, they can't really be involved that much. So as I said, it's rather specific topics. So strategy is one that I think investors can and do help a lot, especially because you're not involved on a daily level. So sometimes you see things that you don't, because you just kind of you see the big picture, you're not so bogged down in details. So that can be beneficial. There is hiring, especially key hires. There is the whole sales strategy, the whole, what I was also mentioning before, sales funnel and stuff. So that's a really important one. and those deep dives are kind of should be fairly regularly done. And obviously fundraising.
Yeah.
So fundraising essentially starts once the last one is done, but it's more about definition of milestones. What has to happen until the next fundraising? What needs to be achieved? And what are the KPIs? So those are kind of the most important ones. And that's sort of tracked. And then closer to fundraising, of course, there's a lot of involvement. A lot.
Absolutely.
Especially if an investor is an investor you're doing follow on, then you are completely actively involved in it.
Right. So, you've sort of depicted a picture, of what's happening. You've sort of explained to us, the profile of the companies, what you do, and, this trend of having more and more money on the market. And what we see from the Western Balkan that is definitely an emerging market is that there's going to be a lot more money in here coming. We are looking at least 3 to 5 funds, arriving and opening up in the next 6 months or so. The companies, the startups are more mature. And I've had a previous conversation with some founders and about this. And they're more of Syrian entrepreneurial type, the people you were mentioning earlier on, the ones who started something, failed, they sold something, and now they are trying something new, right? There's a lot of technical talent here.
Yeah.
And definitely everybody is recognizing this at an international level. What's your take from your perspective? You're, in Munich, you're pretty close, geographically, you're from here. What do you see in terms of opportunities?
So I need to give a disclaimer. I haven't really been very involved there, and I've been a bit removed. Also, in my current role, there is really, unfortunately, no. There was my last role. It was really impossible to kind of even look at the Balkan region or any other, let's call it, satellite countries in Europe. And I started to become familiar with the region really from the beginning of this year, and kind of to follow a bit more and also to get in touch. And there is also obviously Serbian entrepreneurs to participate a little bit in those panels and get to know some startups and some people, get in touch with some of our serial or our entrepreneurs who've been in the US, etc., and kind of have this, do want to either contribute to the system or start a company or whatever. I think that it's definitely maturing. I'm extremely happy to hear about, especially in the last few months, like the deals, specific investments that have happened. Being local patriotic, obviously, when it's Novi Sad, it's even better. No, I'm joking. But like, I'm very happy to see that, not just Serbia, the whole region, but also some exits, some acquisitions. I still believe it's an overlooked and undervalued region. I still believe that only the brave funds really go. It's still, and I believe there's a little bit of gap maybe in the markets, and this could be my view, might not be the case, because also I don't have that insider information who is coming in the next 6 months, so maybe I'm wrong. But I think that there is, so for example, and I've given another country that can be maybe comparable, which is Portugal. And I had a big plan to move to Lisbon, but that didn't work out. I ended up in Munich. So anyways, but I still love the country and I still know all the VCs there. So what I've heard from them is that there is this kind of, they're a small country, and they also have a very similar syndrome, again, disclaimer, not everybody might agree with this, but of being a small country and kind of looking up to Germany, UK, etc., and being like, well, it's hard to bring in investment. So they have very similar problems, While, for example, German investors, I know that because I've been suggesting some Portuguese startups, look at it from a different way. They say, but how can I contribute to them? I don't know the country. I don't really have a network in Portugal or, let's say, Serbia. Well, I think it's a little bit of this match. It's not like necessarily they don't want to invest, but they don't really know the market. They don't know the culture. They don't know the language. They don't know the people. There is simply, and also they sometimes overlook that the fact that maybe they're a German VC or French VC or UK VC is maybe good enough, because being in the specific country, for example, in Germany, let's say there's a health tech startup from Serbia. A German VC has very good network in healthcare. A Serbian startup can never rely just on Serbia as a market. That's an advantage of a small country. You need to immediately think about international markets. Germans can have a privilege and luxury to say, I'll focus on Germany. It's an 80 million country, like a people country. So I think there is this opportunity. So the models, when they're good, and I agree, technical skills are great, our education is great. I think we have a lot of deep tech models as well. So there is that part, and people are really good, but there is a little bit of maybe intimidation with the whole, we don't really know the West, we don't really know the investors, and investors kind of don't know them. So I think what can be a bridge, and maybe this is happening, but I just don't know, is that we maybe need more investors in the region. So there is South Central Ventures, but there is very few. So maybe by having local VCs, local investors that have good contacts with Western countries, so will be those first investors in pre-seed and seed, and let's say good angels, which could be these Serbian successful entrepreneurs that have made it abroad, let's put it that way, or wherever, then they can give that deal flow to these investors they know. And it's a lot easier for a German investor to have a good local partner. It's a lot, I've heard it actually so many times, be like, but we need a local VC to co-invest it.
Yeah.
And so I think that could be definitely a nice bridge. I haven't really received many models from the region, but that said, not from Eastern Europe in general. When I can count on like one hand how many times I've received. That's, I think, been Slovenia and Poland. I'm talking about the health tech specific, what I actually could do.
Thank you for all your actually comments and sharing of what you think that structurally is missing into our ecosystem. And I couldn't agree more. It really is the seed investment scene. I've actually, think that we can have a whole new discussion on our next podcast about how that is coming about and what the opportunities are opening in that perspective, because something very interesting is emerging from that perspective. I would love to ask you a last question from my side, to actually sort of move our discussion forward for next times. And you're interested into meeting founders and early stage startup companies from Serbia, and I'm thrilled by that. And I would love for you to sort of share your motivation to do that, and what you expect from this experience.
Sure. Well, I think I don't have any specific expectation, but I would love to. I did really very early. I never really directly worked with Serbia when I had an office there. And I very much feel like I belong everywhere where I live, but I'm first and foremost Serbian. So I would love to somehow be involved. And I always had that need. And now I think kind of I'm finding a way through this whole VC career that I kind of stumbled upon a little bit in the startup ecosystem. That's actually what I was just saying in the previous one. I think we have so much, founders have so much potential. But sometimes, and I think I've learned it in my own example, and I think in general, that matters the most is your mindset and your approach. So I think especially because many of them have so many scalable solutions. I think that our Serbia and the region need to maybe think bigger, maybe need to be more optimistic when it comes to, let's say, these financial projections, because sometimes that's where actually it fails off immediately when a VC sees, and I've seen that now a few times, that's why I'm saying it now, that in 5 years, a company is going to make 10 million. And I can see that it has so much more potential and can make 10 times that. But if the founder doesn't see it, then there is a little bit of a problem there, right? And they always heard the same answer. We want to under-promise, over-deliver, which is not always the best thing because, So I think where I would like to maybe help is what I was saying about this whole bridge between West and East. That is always an ongoing topic. I think with maybe experience from other countries and also experience from VCs in Germany and France, just kind of maybe also investor network when it comes to that. That's how I would like to contribute. But also because I've been now taking on some advisory roles as well. And those are all in very early stage startups, because that's actually what excites me the most, because there's the most to be helped and done in those stages. So I think in the whole product market fit, in the whole creation of go-to-market strategy, especially in this case, go-to-market always needs to mean international markets. Why this market? Why not? Etc. Obviously, what needs to be achieved for next fundraising? Because I think fundraising is only a consequence. If you do everything right before and you have your go-to-market clear, then and you do fundraising in a structural and good way, then it's kind of and you have the customers and you have a clear path how to get to them, and you have a product. And so that's kind of the most important, and I think what founders should focus on, right? Fundraising is a second. Crucial, but comes as a consequence. That nice pitch deck comes as a result of being clear on what's go to market, how is it going to be monetized, what are the revenue channels, etc. So those are the types of things that sometimes as a VC, it's very clear, but it's not very clear as a founder, especially if you're raising for the first time. So I think this is something where maybe I could help.
Absolutely. Ivana, thank you for being our guest. It's the first time that people hear you, and they'll hear you a lot more because we take you on your words for your advisory and mentorship. So thank you again so much. Looking forward to our next meeting. And everybody, thank you. And again, sorry for the power failure. Follow us on 𝗵founders.net. See you soon.
Gaia, thank you so much. It was a pleasure.
Thank you for following our 𝗵founders podcast. Subscribe to our YouTube channel. Listen to our episodes on Podcast.rs and Sounder. And check our websites for updates on 𝗵founders.net.